So the calculation of national insurance contributions is very, very similar actually to income tax. This is also a progressive tax where you tax through each band. So you don't just work out how much somebody's weekly or annual pay is and tax all at that NIC rate. You get an element at zero, an element at the main rate, and an element at the lower rate thereafter. So on your tax table, you'll only see the weekly rates quoted, but you may get given an annual salary. And the most important thing for you to realise is you'll need to divide that by 52 to put it into weeks, work it out on a weekly basis, and then multiply that by 52 to take you to the annual figure. So the most common calculations in RO3 are the Class 1 calculations, and we're going to look at some examples of those shortly. So these limits vary every single year and are always on the tax table. You can always find them at your disposal. But building on what we said with the class overview earlier on, we have a lower earnings limit, which is shown here weekly, monthly and annual. Don't forget, only the weekly rates will appear on your tax table. The primary threshold rate. We've then got the secondary contribution threshold rate, which is purely and simply to do with employers. And we have the upper earnings limit, which is shown there as well. So essentially what happens is that you pay nothing on any earnings up until the primary threshold. Whether you get credit or not will depend on whether or not your earnings are below the lower earnings limit, where you won't, or between the lower earnings limit and the primary threshold, in which you will. So you pay nothing up until the primary threshold. You then pay at the main rate up to the upper earnings limit, and then you pay at a nominal rate thereafter to an uncapped, unlimited amount. So there's no maximum you can pay for national insurance contributions, but there is a maximum you can pay at the main rate, which is what we're going to look at shortly. So here we have shown for the current year what the rates and the bands are. So it just really summarises what we've just said there, that if you're below the lower earnings limit, no NICs, no benefits. Between lower and primary threshold, no contributions, and you will pay you will receive credit into the system. And then when you hit the primary threshold, then you start to pay at the main rate up until essentially the upper earnings limit, and that's when you get the stamp in your book and you've also paid. So any earnings above the upper earnings limit, which is shown on the left hand side there, will attract the lower nominal rates, and you can see all of the rates that are shown in red, and you can see all of the current bandings which are in black, and don't forget all of these are on your tax table. We're going to look at an example now and work out somebody's NIC class 1s. So here we have Leda, an accounts manager, who has an annual salary of £78,000, and it's asking us to calculate her personal national insurance contributions or liability, which of course will be to class 1s. So we'll have a look on the next page. So working this through then, we've got a £78,000 salary. If we divide that by 52, then we get our weekly pay of £1,500 a week. Makes it easier because the tax tables show us this is in a weekly basis. And then we can apply that £1,500 essentially to the bands. So we've got the primary threshold at 0, you can see in front of you. You've then got between the primary threshold and the upper earnings limit, which is charged at the main rate. And then we've got the excess above the upper earnings limit is taxable at the lower additional rate. And you can see that when we work those numbers out and add them together, the total weekly NICs are shown. So employers, we know, also pay class 1 but secondary NICs. So they pay nothing up to the secondary contribution threshold, and then they pay at the main commercial employer rate, which is shown in red on the slide to the left hand side as you look at it, on the rest of the wages that are paid to an employer. So this can really be quite expensive for somebody that employs a lot of people, and can really be quite expensive when you've got multiple staff and those sorts of things. It's certainly something that will have a big consideration on whether you take people on or not. So we're back with Leda again. Leda, an accounts manager, has an annual salary of £78,000, so we know that one. Her employer's total Class 1 NICs on her salary will be. So we'll look at this one on the next slide. So we've got Leda's salary, of course, is £1,500 per week. It's only the weekly rates that we get given on the tax table. Nothing paid up until the secondary contribution threshold, and then everything else applied at the main employer rate, which is shown obviously in the slide in front of you. So you work that out on a weekly basis, multiply that by 52, and you'll get the annual NIC contribution paid by Leda's employer. So for the self-employed, you'll see a familiar theme progressing here, whereby we tax through the bands, whereby we need to work out essentially the profits that the company has made or the business has made, and we'll apply that to this particular system. So this will be a business, of course, it's self-employed. So there's no NICs paid up to the primary contribution threshold. And then we've got the main rate, which is charged up until the upper earnings limit. The nominal rate is therefore applied above, and there is no cap on the total amount of Class 4 NICs that could be payable. So again, we'll take a look at an example on the next slide. Sam is self-employed and has net profits of £60,000. Don't forget that's net of expenses. Calculate, showing your workings, the Class 4 and Class 2 NI contributions that he will pay. So Class 4 obviously is profit driven. You pay nothing up to the primary contribution limit, and then you'll pay between the primary limit and the upper earnings limit at the main rate. Anything above the main rate will essentially attract the nominal rate, as you can see here. So we've got the 3 different bands for the income that sits across those bands, and we can work those out, add them together. We see the total amount of Class 4. Class 2 is a weekly figure, changes every year. It's shown on the slide in front of you, the current figures. We multiply that by 52 weeks because Sam was self-employed for the entire year, and that gives us the Class 2 contributions. So we need to remember to add the Class 2 to the Class 4 because we were asked to calculate the total combined NIC contribution for Sam's business. And you can see that figure in bold at the bottom.